All right, guys. Good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Friday, March 20th, and it is the end of the week, and another nasty day that we had on our hands, and kind of resolved itself. We saw a couple bounce days this week, and but they're pretty much living up to what I refer to as, bounce, or sometimes we have what's called these rip your face off rallies in a bear market, and you have to just kind of realize that that's the new market that we're in right now, as is a bear market. And these rips that you have, you want to make sure that you're taking profits into them, and not chasing green, right? So that's the most part. Of course, I've got the risk disclaimer up as well. Everything that we're going through in the video is for information purposes only, not giving out any advice or recommendations. So I always like to tell you a little bit about how I did today, and how I did for the week. Today was horrible for me. This is the worst trading day of the week, and basically. I know better, right? These Fridays have been really difficult. Basically all through 2020, even before the coronavirus. So no excuse for me to have a negative day of P&L and to kind of end the week as I did. But everybody's human, and you're human, so sometimes you just have to kind of get over it quickly. But I was having such a great week in terms of day trading and really doing a great job scalping. Before I get into today's performance, one of the things we did yesterday was a member video. If anybody wants that, I'm happy to furnish that to them. If you send me an email, my email is what is it these days? cfromhertz at tribecatradegroup.com. So C and then my last name, FROMHERTZ, and I'm happy to furnish you with that. But what was interesting, the market ended up, pretty, we had a nice bounce day yesterday, right? If we go back to where we were, we closed. We didn't close on the highs, of course, but we were up decently yesterday, and when we did I did the member webinar at 4:30, and so after the close, what I always do is look at how we closed, and because again that's the most important thing. Sometimes we see some things intraday and they seem like, oh wow, this looks pretty good, and then by the time we get to the end of the day and you do your analysis, which again, closing prints are the most important thing. When you do the analysis, I was like, oh geez, wow, this was really, it was nice to have a bounce day, but there was no like technical like buys or anything that I could really come up with that was convincing that the lows were in, right. Again, I'm always going to be looking for these things and so forth, but so I gave a 1 hour webinar last night, and I felt really bad because originally, like, I was like, hey, let's do a webinar and let's talk about some stocks that I'm looking at for my long-term account and so forth. And as I started to do the analysis, I was like, I'm sorry, like this is not how it was supposed to turn out, because I actually, and I hate to talk negatively about like that, but it just was something that after going through the analysis, I was like, oh, geez. I'm like, well, there's nothing that was really, kind of gave you a signal that we were out of a downtrend. So it's one of those things again where you just have to be patient and let this play out. And as I've been saying for weeks now, this is one of the, and especially recently, this has been one of the best day trading markets I've ever seen. But it's not a good. You still have to stay super disciplined, right? Just because, like I say, that doesn't mean anything, right? If I just say, oh, it's the best day trading environment I've ever seen. If you're comfortable with, you have to be comfortable with playing both sides of the market, and you have to be able to be super disciplined. So as I've been saying, if you've been listening to my videos now for a while, just about every trade I put on, I would say 95% of them, I'm putting my stop price in, and I also try to put my targets. I always think about my targets as I'm putting the trade on, but sometimes I don't always label them, but I always am labeling a stop price. If not, that's how you could really get hurt in this market, especially on a day like this where we were up for most of the day or for a good portion of the day, and then we flipped and closed on the lows of the day. So if you're not putting in those stop prices, again, these are not stop prices like a hard stop price, like it's a stop price alert, right? And something that will basically get you out of a trade for a minimal loss, what I like to refer to as a paper cut. But where you're really going to get banged up in this market is by not putting stops on trades, especially like you don't want a day trade to turn into a swing trade or even worse an investment. So again, going back to what I was saying about seeing like the best day trading environment I've probably ever seen in terms of volatility, right? You want, if you're day trading, you want volatility. And again, you have to be able to do some different things in there too. Like just like I'm just trading stock for the most part. I've put on a couple things where they've been call spreads. I've put on one position where it's a leap, which is Microsoft out in January. But I'd say right now, same thing. About 95% of what I'm doing is trading stock. And I know not everybody is able to do that the same way that I'm doing. But that's what this type of market is. The options, you have to be. It's again, I'm not trying to discourage anybody, but it's like almost a death wish to be trying to trade options, unless you're taking them off really, really quickly. There's just too many variables. It's too expensive. The VIX is well. So we're going to talk about the VIX too in a minute. But first things first, I have credit spreads. This is one thing that I saw at the end of the day. I tweeted this out. If you look at some of the things that I tweeted out at the end of the day, I wanted to make sure because I usually put together a end of day video, and I didn't do that yesterday. For the public, I like I said, we did an hour webinar on for members, but I didn't do anything there. But here's basically what I said. I said, in my opinion, and again, this is yesterday, was more of short covering than investment into equities, and credit spreads blowing out. So this is where they were yesterday. Oops. All right, this is where they were yesterday. Now they're this. Right, so they're even worse today. So again, like if you're not familiar with what these things are, I always try to give you a conclusion. But the conclusion is, so first of all, it's telling you it's basic. This is risk off. Treasuries are outperforming high yield credit, uh, corporate bonds, and riskier corporate bonds. So you know that is risk off, and it should tell you to be basically running for the hills in terms of adding risk right now, right? Rather than putting things on like buying the dip and so forth. You don't want to be seeing credit spreads ripping higher and widening out. Why again? Because it's telling you that something is not right in the fixed income market, and the fixed income market is much larger than the equity market, right? The fixed income, some people use the term smart money, which I think is complete. They call smart money hedge funds, which, in my opinion, is not smart money. Smart money, I think, is more fixed income versus equity. That's how I tend to use that term. But God, no, smart money is not hedge funds. And the guys who are just purely following option flow are outright clueless, I would say, unless they're just doing it for a day trade. Um, so anyway, I'll get off that subject because I get stuck on that sometimes. But so that's what this is telling us. If we zoom out, just to kind of give you some perspective on high yield. So again, it's something that's worked for me, right? We know that this is not as high as 2008 yet. Obviously, in 2008, we had something that was different. We had different reasons, right? Financials were right in the focus. So that's different. We had a major problem, in credit in 2008. So The main takeaway is here is this is still ripping higher, and while this is we don't want to say like, oh, well, watch this line and watch this line. If it's moving up like this, it's not a good sign. Um, and it's way above where we were at the end of 2018. It's now also above the 2000, 16. But again, like the point is not to say like, oh, it's comparatively to this. Just be careful while this is going up. Let's talk a little bit about. Let's talk a little bit about the VIX. So, did it make a new high today? No, it didn't. So this would be like the one positive I would say of the day. I've been talking about the 5 period moving average, right? This is something that I've been talking about also for weeks. You could see what I referenced last night. Where's my stuff? Do. Right, I talked about this yesterday with the VIX, right? And I said I wanted to see the VIX get below the 5 period moving average. So we've done that. However, the bad thing about this, and let me show you the VVIX as well. I was looking at this too because I didn't really understand earlier today when if we look at just the 5 day of the before I go on to the VVIX, the VIX was diving around 10:30, and equities weren't really following this. Like equities were still kind of like trapped inside value, around 10 or 11 o'clock. They weren't breaking out. And I was like, why is the VIX going down so much and equities are not following? So it just seemed like it was kind of a trap for the day, and that's what I would chalk it up to. The VVIX, on the other hand, which is the volatility of the VIX itself, like it's kind of the second derivative, ended up higher today and was basically higher for most of the day. So that seemed like that wasn't confirming the move down in the VIX, right? Again, you like to see like the same things. Like if the VIX was down today, also this VVIX should have been down today. The fact that it was up was like there's something not right about this move today. So that's something I thought was notable for the day. This was also really good analysis. This was brought to my attention by one of our Tribeca Trade Group members, and we have awesome Tribeca Trade Group members who are contributing things sometimes that I'm not looking at. This is one thing in particular that, if I can bring this over here from my other screen, let me see if I can zoom this in a little bit more. But this is good. Like so, I know there's all kinds of things that people always say from different sell-offs. People who traded 2008, like myself. Oh, well, I remember this in 2008, and so I know. Like I hate that kind of talk. There are lessons to be learned from 2008. I will give you mine in just a second. But just because you experienced it before doesn't mean that you're like a wizard. So, so keep that in mind. Whenever somebody, I see it all the time on Twitter. Oh, well, this is when I was trading in 2008, uh, you know, I learned da 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 da. Well, that's great, but again, you still have to abide by what you saw and what you're seeing now. So this is something I thought was interesting, right? Talking about divergence, right? So here's the VIX on the top, right? This is going back to 2000, 2000, yeah, this is all 2008, 2007, 2009. But this is the VIX. Notice where the VIX made a new high. And, conversely, you see that the S&P, not exactly, but the S&P made a low back here. So you could kind of say like here, that at this point the VIX didn't make a new high, like it closed here, but so there's a little bit of a divergence here, right? And we ended up rallying for a little bit. Now, notice what happened here, right? We stalled out, the rally stalled out, and we faded in here to March. Now, equities made a new low here, and that was the bottom in March. Look at what the VIX did, right? It confirms that. So this is like the divergence that I'm kind of looking for, right? Where the S&P made a huge new low, but the VIX didn't make a new high, right? The VIX was still elevated around a 52, but it didn't jump back to where it was, which is kind of similar, isn't it? Right, that the VIX, we got into the 80s this week in the VIX, but notice how it didn't make a new high. So that's what I'm looking for. But the other thing that you have to realize is that it takes this process is a it takes a long time. It has in the past. Like, sorry, let me say this again. Let me start over. In 2008, 2009, like one of the differences was the whole thing lasted a long time, right? And it was like a wearing down process, right? You almost got to the point where you're like, geez, I can't take any more of this because it lasted for so long, right? So this point that we made a new low was in. I'm sorry that we made a low here, and that was at the end of December 2008. Right, it took 4 months. Right, no, December, January, February, March, maybe 3.5 months, because that happened at the end of the month. But you know what I'm saying? Like that took 3.5 months from when the VIX made a high, and we did make a new low before. So bear that in mind, that it's really like you really have to keep in mind that this may not turn around that quickly. Again, and I don't know anything. I'm not a doctor, of course, so I don't know much about this virus and how long this is going to take, and with the lockdowns and so forth. I would think that shutting everything down is better than keeping some things open and going through a longer painful process. My silver lining, like that I'm thinking about, is if they shut everything down, maybe they can get these cases down within a week or two rather than a few months. But I don't know that. Like, I'm not an expert on this. The only thing I know, in terms of trading and so forth, is to pay attention to this kind of stuff and manage your. I've been saying this stupid phrase for a while, but control what you can control, which is your risk. You don't want to get to this point when we make a new low, and you're in a bad situation in terms of your account, right? You don't want to blow out your account or have low funds, and then here comes the buying opportunity, and you're so washed out that you can't capitalize on it. So that's the lesson of this whole of this whole discussion, is that let this thing play out for as long as it's going to play out. You could do things like, if you feel like, hey, listen, we're all at home at this point because I'm going to have to leave my office today in New York, and I'm going to have to figure out an alternative plan. So I've been trading in my WeWork office all week long because there's nobody here. I'm literally the only one on the floor right now. There was probably about two or three other people, which is, I think that's perfectly social distancing. But hey, the government, whatever, thinks differently. So I'm going to have to come up with another plan. So this will be the last week of me for God knows how long, of trading in an office. I'll be at home, and one of the things that's nice about being at home is being able to analyze stocks and trade and keep your mind active and so forth. So that's good, but however, you don't want to, like, you know, blow yourself out, right? Which again, a lot of people did that in 2008 and 2009, and you want to be able to manage through this. So again, the reason why I'm saying this is because I have a feeling a lot of people had a bad day today. I had a bad day today, but I'll get over it. I mean, a bad day is not going to ruin, hopefully, my month. Um, my month's performance and so forth. And that's the way you kind of have to think about things. And you have to be able to get, if you have a bad day, you have to be able to get over it and wipe the slate clean so that you're not compounding the issues. If you don't get over these things on a day-to-day basis and you're stuck in the rearview mirror, you could have a tendency to compound the issue, and make it worse than it is. So again, these are all things I'm here to help, and I'm happy to take questions, even though I may be traveling tomorrow. But if you're not a member of Tribeca Trade Group, these are the things that I'm really like focused on trying to help. I'm always focused on trying to help people so that they can prosper and do well and not make some of these mistakes and so on and so forth. Even though I know I'm susceptible to them and I'm human as well. What else? Do we want to talk about the week's performance? I don't know. This was also today. What performed worse? Look at these gold miners. They fell. Somebody asked me about GDX the other day. I just think some of these things are too difficult, right? I think when you have this type of volatility, you want to keep your trading plan as simple as possible. And I think like partly this week, like on Wednesday and Thursday, I started to trade some things that I haven't traded in a while. I've been, like I said, mostly day trading and sticking to like, very liquid things. But I started to get a little bit, outside of the fringes of what I've been doing for the last couple of weeks because so many things like today, like the airlines were ripping today, and I traded like a little bit of Hilton today. But you have to be careful with, putting on too many positions, right? And that is what kind of hurt me today. Was you don't want to be accumulating positions, um, in a bear market. So that's another lesson. Am I going through enough lessons? But again, this was the price action for the day. If we go back to this. The value areas, it was said in the room earlier that, we look like, again, if you put this up against the VIX, right, this low, this was at 10:30 in the morning, which was here, and we could not get out of value. Normally when you see something like this, like we should be breaking out to like the week's highs, right? This was the low of the VIX for the week, 57. Right? This is the whole week, or pretty close to it. This is where we started the week Monday. We should have been very close to breaking out to the highs of the week, and we weren't. This was the high of the week, and we couldn't even get outside of value. So that seemed like there was, like I said, there was something that didn't seem right to me, with the VIX making a multi-day low and we couldn't even get even close to yesterday's highs. So that was the first thing that didn't seem right today. So let's talk a little bit about some of the. So again, things like gold miners. If that person, because I didn't answer their question, they asked me a question about Nugget, which I think is absolutely suicide. Trying to trade that, like that is any of these leverage ETFs, by the way, they are day trading vehicles. They're not. They even say it in the damn prospectus. They're not supposed to be held overnight. By law, they have to put that in the prospectus. So what do you think? They're wrong? um, all right. So let's talk a little bit about the positives. Do I have any positives? So I do think sentiment will, being that it's washed out as it is, this move in Apple was, I don't know what happened to Apple at the end of the day. Keep in mind, it is quadruple witching or triple witching. Oh, wow, look at that. It took out that VPOC down there. Oh, that's interesting. And we're also into support. So those are the things that I want to see like being taken out. You get no more VPOC after that. So I don't know if I'm going to put this on Twitter because people don't understand what a VPOC is. They think I may have drawn that in or something, but that's actually like it's a good level to be taken out. Now again, that doesn't mean that it rebounds right away, but I think it's interesting. The one thing I don't like about the S&P is that on the weekly, we basically don't have anything of support. We broke through this. I know some people were looking at this level. I'm afraid that we're going to take out this thing down here. So, and then also, again, I'm trying to find some positives. I think what you want to be aware of is that sentiment is pretty washed out. And if we do get some good news, like in terms of, I think what people are watching again, which I hate to do this because it's outside of, what I try to do, which is basically watch price and volume and confirmation. But I think what people want to see is these cases start to slow down, right? They can increase, but they have to start increasing at a decreasing rate. That is what China did. That is what South Korea did. So that's the place where we need to get to. And if that happens, we're probably going to have one hell of a rally. So, that said, I'm going to leave the video here for the day. What we're going to do next week, in the beginning of next week, is what I kind of started saying in last night's webinar. I'm going to be formulating a plan, right, in terms of what names do I want to be adding as I go along. One of the things that I stressed this morning, and what I've been talking about this morning, is I have two accounts, right? One account is my trading account, right, which I'm doing, as I've already said 20 times, the majority of what I'm doing is day trading. The my long-term account, right? If we go back to this VIX chart, sorry, the where is this thing? Right, and if we look at this S&P, you can add. I've kind of like changed my view just a little bit about this in your long-term account, like in your retirement account. Picking spots down here, I don't think is a bad strategy. But again, picking spots and scaling, right? I'd never want to add a whole bunch of money at any one of these spots until we get a definitive buy signal, something like this, where the S&P makes a new low and the VIX doesn't make a new high. That has to be determined. And right, so there's other things that we're going to be looking at, but keep in mind, like somebody said to me, and some of the things that I've been saying is, in terms of like buying in your long-term account over time and in increments. Someone said to me last night, they're like, yeah, but we're going into a recession. Well, yeah, who doesn't know that already? The other thing is, at the end of the recession, what happens? The stocks go up. In all of the cases that you look at, the Great Depression, right, back in the 20s, 1987, 2008, every situation, stocks have ended up higher. So you have to think about that. Yes, we're going to be down, and we're probably going to be down for a period of time. But over the next, and again, it took 3 years for the market from when it bottomed in 2008 to when it made a new high when it bottomed in 2009 to when it made a new high in 2012. But it made a new high, and it made several new highs, and we're still like the end of the story is that stocks will go higher long term. So that's why I think scaling into this weakness in your long-term account is something that I will be doing over time. And again, I'm not going to be like getting super exposed, but I'm going to be picking spots along the way. So we're going to go over that more next week. And sign up to be a member. Again, I'm here to help. I think if you look at some of the other, I'm not trying to badmouth anybody on Twitter, but I think I do a lot more hand holding. I see guys that they only come out of the woodwork when like the market's going up, or they don't tweet for days on end, because maybe the market isn't providing them the right signal. I guess, but it doesn't mean that there's not anything. Like you still need to help. Everybody needs a helping hand. You don't just go into hibernation for a couple days because you're having a bad day. That's not me. So we'll be doing that next week and formulating like kind of a long-term plan in stocks that I think can do well in this environment, because I do think stocks like Amazon, Microsoft are going to benefit from the situation. But when everything gets hit like it does today, they're not going to do well that day, right? And that's the predicament. All right, guys, have a great weekend. I'll be in touch this weekend, and I'll see you guys on Monday.